The Hedgeless Horseman here. It's Monday, March 28th, 2022. I've been thinking on a few topics lately, and I will go over, as per usual, just how important sentiment really is. And in my opinion, the things I see most people make mistakes from is simply, I mean, the typical thing, don't knowing what you own, not understanding how the market works, etc. Because we as humans hate uncertainty, and that's why you think or why you see a lot of people, try to read something into everything. Especially negative in a bearish sentiment environment. Why isn't this stock going higher? Why does someone know something? And most of all, people don't want to see a stock go down ever, pretty much. And I think the best way is, the market is really psychological warfare, and like Sun Tzu said, to beat your enemy, you must understand your enemy. And in my opinion, not join in when it does, stupid things. Because again, 95% plus, well, almost 100% of people will get the same feelings, but 95% of people will act on said feelings and let it override what makes sense, rationality. I wrote a post a few months perhaps back now, which was called Miners. It is a rigged, yes, it is a rigged game, but it always changes. Where I pretty much described that in a declining sentiment environment and around sentiment bottoms, it feels like it's a rigged game against us when you're investing, because even if a company puts out good news, sometimes even great news, it barely gets revalued by the market. Sometimes a stock can even go down on good news, and if it's bad news, you can see a stock crater. I mean, I just looked at pure gold mining today; it's down 40%. I don't know the exact details, but I think it had something to do with cost cost running higher than they thought, and there's been a bunch of unfortunate things happening for that startup junior trying to, or has gone into production, but it's experienced growth pains, which we've seen in a bunch of juniors lately. I mean, I can relate to Novo Resources. I mean, it is a very tricky business to put a mine into production, of course. And yeah, I mean, it's getting totally slaughtered. I can't say if it's a rational decline of 40% or not, but I think it's just one of those things again that in a poor sentiment environment, people's fuses are short. People get fed up a lot quicker, especially on bad news, because it's like each additional negative thing is the potentially the straw that breaks the camel's back. In this case, the camel's back is the sentiment of the individual uh, mining investors. But I also stated in this article that, I mean, yes, it's a rigged game that doesn't really make sense when you're in a declining sentiment environment, because on face value it appears that we take on risk with little to no reward most of the time. Again, it's like almost a lose-lose situation. If they come out with good news, you barely get rewarded, maybe even punished actually. If it's bad news, you get punished. So then you take risk of it not being good news, and you get punished. But even if you are lucky enough that it is good news, you get punished anyway. So from that perspective, it makes absolutely no sense to be in this sector at face value, and of course uh, that's again also evidence of just how irrational this market is, and that should tell everyone just how sentiment driven it all is. And again, it's like you can be right on a lot of things. I mean, I like this expression that Buffett uses: in the short term it's a voting machine, in the long term it's a weighing machine. That's why I build my cases typically for the long term, when it allows to become a weighing machine. So if I'm right on the fundamentals, price will, in a volatile way, mirror the underlying fundamentals if you fast forward 1-2 years, etc. And the thing is that it always changes. So when we get overly punished by sentiment, we will get also overly rewarded. In other words, the game will be rigged for us, and we saw that last week on a few good days. I mean, like I said in a video, at that time there were some juniors that were up 20%. So that's the thing. It's like, to get some perspective, there's no real reason why, except that it's undervalued from the start, why it should go up 20% on no news. So that's a case of being rewarded for nothing, basically, at face value. And again, we can debate whether said the junior or juniors already should be up 100 to 200%. So from that perspective, yes, you're actually getting rewarded for understanding that the company is undervalued and will go higher in the future. But again, on a daily basis, there was no real reason for it, and other juniors went actually down that day when I saw some juniors go up 20%. So that's what you're gonna see when we go into a better sentiment environment. That the stuff we get punished for now, you will see the opposite later. So again, the only way that's why I hate selling low, etc. in poor sentiment environment, because if you're along for the ride in the poor sentiment environment, you're in a lose-lose situation, and you don't know when that's going to change. But when it changes, that's the time where you claw back all the irrational punishment you've taken in the let's say bear phase. So I mean, if you sell, in my opinion, if you're along for this, when you get overly punished, it's a lose-lose situation. Then you sell out here or whatever. Then you're not even part of the leg up where you will get overly rewarded for things that happen. A stock can go up even on pretty poor news, or especially up on no news, etc. Just because people are greedy again, money is flowing back. That's just how it is. It's the ebb and flow of sentiment, of group sentiment. When you understand that, it's also a lot easier to be comfortable with seeing a share price that is low, because you understand that there's no reason for the share price of your favorite junior perhaps to actually be low. It's simply down to that's how the markets work. It's the ebb and flow of sentiment. So you will start, like I say, I mean, the whole point is front running. I mean, if you're making a good buy decision today, that's not going to pay off tomorrow. That might pay off if you bought here, that paid off, like really paid off 2 years later. So it's like the good decision and the opportunity is in the now, but the actual reward is later. So if you bought here, let's say you bought here and this was overvalued, you get rewarded in the next, I don't know, 3 weeks. You feel smart, then you get punished for 2 years. The trick is, again, it's like knowing the difference between outcome and a decision, and the fact that stuff will take longer to pay off. And again, just how important sentiment is. Again, like I showed before, this is Great Bear. This is strategic metals, which I'm using as a sentiment indicator pretty much. You can see low here pretty much corresponds with this low. This low here pretty much corresponds with this. This is the COVID flash crash. This was the latest low correlated with Great Bear. These companies have nothing in common. When you look at the chart, it's like they had similar news since 2018, because that would explain the somewhat similar oscillations. That's not the case. Totally different stories. Great Bear was a hyper growth story. Strategic metals is a conservative prospect generator. And again, as I like also point out, that the highs, the lows are higher for the growth story. That's why I like that. So you see these oscillations when it's a weighing machine in any given time frame, but at the end of the day they create a lot of value over this period in time. So even although it was swingy over the years in any given time frame, it ended up a lot higher. Even the low here was a lot higher than the low here. So that's the weighing machine doing its thing, and then you have this voting machine doing the oscillations. And I recently got an email about SK mining. It's like the comment was somewhere along the lines of SK is not going anywhere. When do we expect drill results, or do I expect we will have more drill results soon? So okay, right off the bat, that's first line. So basically, understandable perhaps, frustration, and then when is the next exciting catalyst? So when you think about that, we can take the sentiment driven market driving down into the micro focus. So how it relates to stocks, for example. So okay, you see this very convoluted consolidation since 2021. So that's a year of consolidation. Of course, SK has put out a lot of news, a lot of good news over this time period. So how can you explain this action, let's say? First of all, this is initial. I don't remember actually what really spiked this. If it was the first high grade results, etc., from TV or Jeff, probably was. And when the market gets excited, back here it was blue sky, blue sky, blue sky, and then the market starts to digest and needs the fundamentals to catch up with what's priced in at a sentiment high, let's say. But then you also see the strategic melts here. So from this point on, sentiment was declining in the center, in the junior mining sector. So that was a wet blanket basically, where throughout this whole time period you had a bias to sell simply because people didn't feel good about the sector. Okay, that's going to be a drag. And then of course you will also have the boring period factor, that as it gets closer to the last drill results and end of the field season, people are going to get bored because the fellow who wrote to me, he asked when is the next drill results. So when the last drill results are out, etc., and when the last hole has been drilled, that's like the both are starts of the period where you can't, quote, get rich overnight. So that's gonna also be a wet blanket on top of sector sentiment, negative sector sentiment. So okay, if we fast forward here again, like front running the crowd, how the crowd works, how greed and fear works. This was the last drill results from this last field season, and you can see that sentiment in the junior sector was increasing a bit, and of course this was an exciting catalyst because there, quote, there was a chance you could get rich overnight, which is not the case, never, but it's you can see a good pop, etc. It could be a monster hole. So this is greed is coming in here, so people want to chase that. What happens after? Immediately we're both in the boring period of there not being the last assay results are out, and that's going to extend for I don't know when we will get the actual first assays, but that's we're in it now. That immediately begins as soon as the last results are out, because then there's no material news that can get you rich overnight as far as the market goes. And I don't remember when the last hole was drilled, but that is maybe started, when was that? August, maybe October. We SK caught early snow up there in BC so it cut the field season short, which was not a positive from an excitement standpoint. So no drills were turning, so that was a wet blanket, and then we had now the last actual answer result, so that's another wet blanket, and all this through this period as well, you have a third layer of sentiment negative, which is are they gonna raise? When they're gonna raise? How much are they gonna raise? Because everybody always focuses on dilution, even though it's like in the grand scheme of things, it's like in my opinion, who cares? Especially when you think about, well, I wouldn't say who cares, but it's like, again, it feels like we're trained to focus on some stuff, and everybody focuses on the same stuff, so everybody thinks it's the right thing to focus on. But that's, in my opinion, I mean, what should be the deciding factor of any case is like what is actually important. Forget about what the market thinks, because I mean, honestly, there's some cases where like it wouldn't really matter if they raised 5, 10, or 15 million or whatever, because maybe the target is so big, so it's like either it's gonna be a big discovery or not, and then it doesn't really matter if they diluted with by I don't know 5 or 8%. It's like in the grand scheme of things that's nothing, but that's not how the market views it. Everyone is like dilution. That's what everybody focuses on. And of course, typically what happens is that when a private placement is put out, let's say, and some people who want to be in it, maybe they sell stock. So that's also the effects is actually a wet blanket as well. I mean, regardless, you can be bullish on a stock, but if you can get into a private placement that it's a even better deal for you than the stocks you hold, which you bought in the open market, it makes sense to sell some stock to get into the private placement. So from a micro perspective, we can explain, okay, we have the end of the field season, negative sentiment bias. We have the last result and start of the 100% boring period, because there's no drills and no assays awaited. Except we actually got, that's also the interesting point, we actually had more sample results and a bunch of geochem results here, but you can see that didn't really do much of anything for share price in the short term, because we had just started the most bearishly skewed micro sentiment environment for SK. So the focus was still, there's no material, because the market doesn't understand these news releases anyway, but it's, again, like I did a video on, I mean, it says a lot about the blue sky potential for SK, the coming years, etc. But in the short term, that's not an exciting news release for majority of market participants. So that got overruled by the psychological skew from a boring period, quote, fear of dilution, etc. So, okay, in light of sentiment, and when is like this fellow sent me, when are we gonna expect new drill results again? So it's like you can tell by those comments, how we work as individuals, at a I don't know, visceral level. So let's just play around. Okay, what can we expect, or what do I think we can expect in SK Mining? I think now, for example, this positive news did not get priced in, but it's gonna affect coming news releases. So we have the announced private placement, and that's gonna basically, because that's the end of the fear period for the dilution aspect. So when that is closed, etc., there's no reason for anyone to sell to get into the private placement. There's no one that needs to fear a raise anytime soon. So that would be the end of this. And again, the boring period, as soon as we get closer to the more exciting ones, I mean, it will get less and less and less boring because it's getting, closer to more excitement. So while the boring period, let's say strength of the negative skew has been, was strongest as soon as the boring period started. When we get closer to actual drill start and potential assays, the excitement bias is going to kick in again. So I expect private placement fear and negative bias is going to end with the closing of this private placement. So that's one negative wet blanket. And as we get closer to drill start, let's say around, maybe it's around here actually. Okay, this is somewhat exciting. It's low risk. Well, it's not really much of a risk at all because there's no results. It's just the start basically of the fuse is lit on when we can get assays again, which is exciting, like we saw here. So in my opinion, it's like the best thing is like when I get people writing me about SK is not going anywhere. That tells me right off the bat we're at the sentiment low in the story. It's like max boring right now because you had both no exciting catalyst right now, even though this was, but this was too long term, and we had a decline in price. Of course, the key is, in my opinion, to front run. First of all, fundamentals that are not priced in, like the news, the information in this news release that says a lot about the coming news releases, and also just how the most of us work. So I expect a movement, something like this, that as we get closer to low risk drill start and high risk assays, excitement is going to start picking up while boring period weakens in strength, let's say. So I think we'll be up here somewhere around, maybe, and this is, if sentiment in juniors didn't do much. I mean, this could be if we go into, if juniors really kick off or gold really kicks off. I mean, that we could go something like that. If juniors actually, crashed or whatever, maybe we go something like that. So it's a huge spread here, simply because how the overall sentiment is going to affect any particular junior, obviously, like we saw in Great Bear. So it's like this is not about precision, and I'm not actually playing, since I'm banking on, I'm buying SK for news release, let's say number 5 to 20 or whatever. I'm not really playing these because in the grand scheme of things, I'm not after this. I'm after what SK is gonna be, I don't know, 2 years from now or whatever. So this is just noise in the grand scheme of things anyway. But I hope you can understand my point here, that when you look at any particular stock and account for sector sentiment overall, a lot of these movements get explained simply because overlapping biases one way or another. So again, we're about to leave the period of, or we have left the maximum boring period already, so that's going to decrease. We're going to leave the dilution fear behind us, so that's going to end 100% right away when this private placement closes. And then we're going to, for every passing day, we're going to get closer to drill start and also assay results. And this is, of course, going to just, this is just going to go on and on for, X amount of field seasons, etc. So I don't know. I guess what I'm trying to say is like, when you understand how people think, how most people invest, etc., you don't need to get frustrated by stuff, because you can quite clearly see that, okay, given this was a long period of consolidation, and you couldn't have guessed what the actual results were when you were just looking at this, because again, at face value, it looks like, SK hasn't been going anywhere. But fundamentals have been going like this. But there's been overlapping sentiment biases and a declining market market or sector sentiment in the background as well. Again, it's like if you understand the enemy, if you can spot who the fish is, that's a good thing. So it's like our job is not to like agree with everything the market says. It's like, yeah, it's max boring now, for example. Yes, when you understand that and you feel it as well, it's like, okay, how do I take advantage of that? Obviously, that's, when you can make real money is to take advantage of the delta in the sentiment. Buy when sentiment is low, preferably a growth stock. I mean, you're going to make a lot of money just realizing that everything changes. And this boring period here, etc., will change. Like the private placement fear, that's about to end 100% in its totality. And we're going to go closer and closer to the exciting phase of seasonality for a Northern Explorer. So it's like just all the time, just look ahead, look farther ahead than the market, and visualize what you think is going to happen over the next 6 to 12 to 18, 24 months, and always make your decisions based on that. I mean, I have no idea if SK is going to go like this or this or this or whatever. It's like, again, my goal is to come back and have SK sit on, hopefully multi-million ounce deposit, maybe a few discoveries, etc. We're not even close to that. And of course, the only way to get a 10-bagger, etc., is to sit on your ass basically for a few years. So it's like it's impossible almost to get a 10-bagger if you can't just hold the stock for X amount of years. But in the meantime, you will have all these micro phases of sentiment bias, euphoria or greed, fear, boredom, euphoria and greed as the season continues, and then we'll go into boring period again, and maybe private placement fears again, and then it will just start all over again. So that would explain the oscillations you see. And I didn't follow Great Bear too much, but like probably the same thing. It's like, okay, with exception for the flash crash, but here maybe the declining sector sentiment, maybe private placement fears or whatever. Maybe it was simply a bit too matured. It's like, okay, how are they going to grow this a lot now? Because obviously the bigger Dixie becomes, it's going to be harder to push the change the needle, or how do you say it? And it's like the big picture thing. Newmont Mining, I mean, that's close to whatever. It's not far off from breaking a high it put out in 1987. So there's so huge macro things going on right now in the gold sector and gold overall. I mean, gold is not far away from the all-time highs, etc. And it's like, I mean, Goliath Resources is a perfect example. It's like, okay, drill start might be, who knows, maybe somewhere around June 1st. Then assays, I don't know, September. I don't have 100% knowledge of when that might be, but who knows? Maybe it goes actually something like this, and then something like that. And depending on, I mean, I think if the market really understood how that this could be one of the most impactful drill campaigns in the junior mining space. I don't know how high it will go on assay hype, right off the bat, because after just this coming field season, they might have an inferred, multi-million ounce system from just 24,000 meters of drilling. So it's going to be impactful for sure. So again, it's like, what do I think regardless of what the actual sector sentiment is. I mean, the micro sentiment for Goliath is that each day we're getting closer to drill start, and after that, each day gets us closer to assay results. So it's like there's no mystery here, and it's gonna do its thing on any given day. If gold is down, maybe it goes down. If gold is up, maybe it goes up. But these will be the there will be bullish backdrop. A bullish backdrop from a micro perspective for this particular junior, and of course if we actually have a mining sector, junior mining sector, that gets its groove back as well, maybe the sector sentiment will keep going up, so it actually will overshoot these stars, or if sentiment would turn for the worse, maybe it goes down a bit lower, whatever. And at the end of the day, I don't really care, because the target is the target, whether the size of the target is the size of the target, and the results will be what they are, regardless of what the sector sentiment is. It will not change really anything about the price. And at the same time, gold, if gold is at 2000 or 1900 or 1850 or whatever, I mean the results are going to be override what the gold price is in the short term anyway. I mean, this won't be a mine for a few years yet anyway. So it's like, to wrap up, there's so much noise, there's so much bullshit out there. The market is as rational as, I don't know, as a 5-year-old toddler a lot of the time. And it's simply, again, like in poker, you have to understand biases of people, and in the actual investing game, understand that the market is short-term orientated and it's sentiment driven. And then the natural question is, how do I take advantage of those facts? And obviously that means that in the sentiment perspective, you take advantage of the fact that it will change. And from the short-term perspective, you will figure out that, okay, if I play the longer game, so if it prices the short term, I'll buy the long term for short term pricing. And then you just have that on a rolling basis, because again, it's like, if I just wanted to trade, if I was only a micro sentiment trader, whatever, in SK mining, for example, I would just pretty much bet on this happening, that okay, I know that we've just one negative skew is behind us with the PP closing. The excitement period is getting closer and closer, so the boring period is nearing its end and will get weaker and weaker. So it's like you could just play that if you really wanted to. My preferred way of going about it is to simply buy when stuff is cheap. So then you get based on a long-term perspective. So then you automatically will have a much easier. I mean, if you were just a value investor, you wouldn't need to look at the sentiment to realize that this was probably very cheap. Great Bear was probably worth more here than it was here, but you pay the same price, and then you get rewarded for it. And you would understand that a flash crash here had little to nothing, well, had nothing to do with the actual Dixie project. It was just a liquidity event, so this would make it super cheap down here. And it would, Great Bear was probably worth a lot more here than it was back here. So you get all this progress for free. And that's how I look at stocks like SK Mining. I mean, you pay the same price here, but that's not accounting for dilution. Same price here as you did back here. And then we had, a few drill holes perhaps. Now we have 8 targets just near TV and Jeff, and I don't know how many targets on top of that, and Scarlet Ridge, etc. So you're buying a lot more for pretty much the same price. And even if you bought high around here or whatever, it's like, if that was a mistake, I mean, that depends on your time horizon, because if SK is going up here in, a year, let's say, that was not a mistake. But the only thing we can do is get better and better, and I'm much better, I think, of just sticking to my long-term plan of buying future catalysts for today's pricing. And relative to that, I simply have a much easier time to buy when it's low, because I know these. I mean, we know we will have real start, we know we will have assays, etc., and we know there's more than 8 targets left to test. So there's nothing that can even kill the story, really. And that brings me on to another point, but that will be another video. Thanks for listening. Consider me biased. Assume I own shares of all companies I ever mention, and that I'm sponsored by all, etc. I think that the arguments themselves should do the talking, and always do your own due diligence. Thanks for listening.